Welcome to your market update. Today, we are diving into the latest movements in United States stock futures, which are inching higher as traders react to President Trump's recent comments on trade and tariffs. As we gear up for the trading day, the Dow, Standard & Poor's 500, and Nasdaq futures all show positive signs, indicating a cautious optimism among investors. President Trump has returned to the White House with a focus on America's trade relationships, particularly with the European Union and China. His remarks have sparked a flurry of activity in the markets, with many investors weighing the implications of potential tariffs on these key trading partners. As we take a closer look, we see that shares of American carmakers have rallied following President Trump's orders aimed at boosting United States energy production. This sector's response is a clear indicator of how trade policies can directly affect market sentiment and stock performance. However, the mood remains cautious as analysts warn that a more protectionist approach could lead to inflationary pressures. This uncertainty raises questions about the Federal Reserve's interest rate plans, with many anticipating that the Federal Reserve will maintain current borrowing costs in the coming weeks. In his latest comments, Trump has specifically targeted the European Union, labeling it as very, very bad for United States trade. He has suggested that tariffs may be necessary to achieve fairness in trade, which has left many investors on edge. China also finds itself in Trump's crosshairs, with discussions of imposing a 10% levy on all goods entering the United States. This potential tariff aligns with the president's broader strategy to address what he sees as unfair trade practices. In light of these developments, the market is bracing for further volatility. Trump's tough stance on trade could have significant implications not only for international relations, but also for domestic markets and consumer prices. Meanwhile, in a surprising twist, Trump addressed questions about his involvement in the Trump meme coin, downplaying his financial gains from its success. He referred to the profits as peanuts in comparison to the wealth of technology billionaires, which adds another layer to his unpredictable market influence. Netflix has emerged as a bright spot in the earnings landscape. The streaming giant reported strong fourth-quarter results, exceeding analyst expectations and driving a surge in its stock price. With Netflix adding nearly 19 million subscribers in the last quarter, the company has demonstrated resilience and adaptability in the competitive streaming market. This performance is a refreshing contrast to the uncertainty surrounding other sectors. As we look at the broader market, other companies like Procter & Gamble and Johnson & Johnson are set to release their earnings this week, which could further influence trading trends. Investors will be closely monitoring these results for insights into consumer behavior and economic health. Oil prices, which have taken a hit following President Trump's declaration of a national energy emergency. This move aims to maximize energy production, but has also raised concerns about environmental impacts and sustainability. As we see West Texas Intermediate crude slipping to $75.50 per barrel and Brent falling to $79.03, the implications of energy policies on global markets are becoming increasingly apparent. Traders are reacting to the potential for increased production alongside concerns about regulatory rollbacks. In the midst of these market fluctuations, it is clear that Trump's administration is shaping a new economic landscape. The combination of tariff threats, corporate earnings, and energy initiatives creates a complex environment for investors. Don't forget to subscribe to our channel for the latest updates and insights on market trends.